Good morning. Welcome to another episode of the Mizuho Week Ahead. I am Boon Heng, market economist at Mizuho Bank. This week's theme is opening shorts, realignment, and closures. Amid substantial turbulence, markets looked out for anchors of stability last week. After the previous weekend's executive orders igniting the first major salvo of tariffs, Canada and Mexico sought realignment with President Donald Trump, offering concessions on border issues and successfully delaying tariffs by 30 days. China, though, did not avoid the higher tariffs and retaliated with measures such as tariffs on US energy and selected autos. While markets have acknowledged these rather measured responses, a clouded timeline to negotiations will weigh on the multiple features between the two countries. Specifically, Panama Canal issues, revoking duty-free small parcel rules from China, and differences over the South China Sea are some of the multiple flashpoints accentuated under the new administration. Financial markets turned to US Secretary Scott Bessent, whose unchanged debt plans focus on US energy dominance, realignment on Fed independence, to realign focus on longer-term US yields led to longer end US yields falling and lower oil prices. Nonetheless, the NFP report on last Friday led to a surge in US yields and a stronger dollar. US non-farm payrolls for January underperformed, with 143k jobs added, which is below the 175k consensus estimate. That said, it is hard to disagree that the overall labor market appears robust, with an upward revision of 100k jobs for the past 2 months. Furthermore, the unemployment rate declined to 4%, alongside an increasing labor force participation rate. Nonetheless, risk assets did not view these prints as good news, as US equities sank across the board, facing the threat of stickier than expected policy rates. Across the Atlantic, the Bank of England lowered rates by 25 basis points in a widely expected decision, though 2 of the 9 members voted for a 50 basis point cut. As such, the pound underperformed G10 peers, even as their forecasts of slower growth and high inflation warned of more two-sided risks. In Japan, the yen outperformed last week as earnings and household consumption data outperformed alongside hawkish undertones from BOJ officials calling for more interest rate hikes. Caution should be in abundance as the BOJ realigns towards an elusive neutral rate from the other direction, which is hikes rather than cuts. In Asia, last week, Vietnam CPI upside surged to 3.6% was largely on account of tax effects and administrative measures rather than concerns over runaway inflation. In turn, calls for the State Bank of Vietnam to tighten policy rates are likely misplaced, especially amid global trade complications. Meanwhile, in India, the RBI kicked off the easing cycle with a widely expected 25 basis point cut to 6.25%, which was a unanimous decision, disappointing those who were looking for an upsized cut as the rupee gained on Friday. Nonetheless, the scope for further easing implied that the rupee still underperformed last week. Given the benign inflation forecast and the RBI's governor's allusion to space to focus on growth, the easing bias is retained even though explicit forward guidance was absent. On FX, Governor Malhotra saying that the central bank interventions are to smoothen excessive and disruptive volatility without targeting specific levels. This allows for appropriate FX reserves utilization and tempers speculative bets of excessive weakness. Looking ahead, we expect the BSP to continue their easing cycle on 13 February as Q4 growth continues to underwhelm and inflation pressures remain relatively managed within their target range. Without a doubt, for this week, US CPI will be of key focus to renew interest on the prospects of further Fed rate cuts. Even as the week ahead looks to be relatively calmer on the data front, there will hardly be any closure to the various macroeconomic issues that have sprung upon us. Haven bids will likely be retained, even as risk-taking behaviors may attempt a comeback. For more information on the events this week, please refer to our week ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you.